Welcome back to part 4 of Antidote to the Wire Fraud Epidemic. My name is Kim Lay, and I'm the founder and CEO of A2Q2. In this segment, we're going to talk about how do you fight this fraud, and we're going to specifically focus on entity-level controls, and there'll be mini parts focused on AP controls, treasury controls, and IT controls. So, as a recap, in segment 1, we talked about what's happening and who it's happening to. Part 2, we talked about how the scam works. Part 3 was on why the scam was so successful. And now in part 4, how do we fight it? How do you fight it? And with practical controls in 4 areas for you to consider. So fighting it is about prevention. It's about sharing information about the scam with your team and how it gets perpetrated, so that they know they can be the gateway for the scammers, and implementing suggested internal controls immediately so that we don't fall victim to this. Let's talk about entity-level controls then. Entity-level controls are activities that pervade throughout your organization, from corporate headquarters to different subsidiaries to different locations. It's throughout the organization, not just a single company, but the whole organization. And a culture that encourages a questioning mindset is really important, especially when it comes to investigating requests from executives that are unusual or unexpected, because we all want to be helpful to everyone in the organization, particularly when it's a CFO or CEO asking us to do something. We'll jump through hoops for them. We just need to make sure that the hoops that you're jumping through are for the right CEO and not the fake one. So one of the controls we highly recommend is implementing and updating your authority matrix to set limits that require multiple levels of approvals, including board of directors for selected transaction types or amounts. And let me explain that an authority matrix is broader than a disbursements approval authority matrix. It outlines who has the authority to enter into transactions, whether it's sales transactions and purchases and so forth, and just even in general agreements on behalf of the company. A disbursement authority matrix is just around how many people can sign checks. Who are those people? At what amounts do you need dual signatures on a check? Wires, who can approve those? What are the amounts? What about ACHs? That's very specific. An authority matrix is broader. In the next 2 slides, I'm actually going to show you examples so that it can help you maybe set up an example that fits a policy that fits your organization. The second thing we would suggest is implementing a procedure to require in-house general counsel review. And if your organization is too small to have an actual fully dedicated in-house, at least a legal reviewer, someone that you've gone to, and even if it's an outside reviewer, at least it's someone that you know has the legal lens through this. And why this is so important is because when these fraudulent email requests have come in, they are for non-standard transactions. And so if there's a non-standard contract that needs money to go out, if you said, have you gotten approval from Joe Smith or Jane Doe, well, then if it doesn't show up, or it doesn't show up in the form that you would recognize as for your company, then you would know that this is a fraudulent request. And the third thing that we would recognize is holding periodic and company-wide communication to bring awareness to these types of issues so that everyone in the organization knows about it, and we encourage communication between departments, because as we all know, oftentimes executive assistants are one of the most important people in the organization. They see email traffic, and if they see something that looks suspicious, if they know about this type of fraud and how pervasive it is, they can be on the lookout for you. And when they see something like this, they can say, hey, this doesn't look like the CEO's tone of voice or the email that they would send, and getting ahead of this fraud. So here is an example of an authority matrix, and we took this off from one of our largest clients, and you can see here that we've scrubbed it to protect the innocent. but they've actually done a great job of outlining and just looking at the table of contents alone, the types of transactions and defining it so that anyone in the organization will know what do we do when we encounter one of these transactions. So let me go over it with you. So the first part of it is the policy, the purpose of it, and the scope and the delegation authority. So if you are a manager, maybe you can approve up to $5,000. If you are a director, maybe you can approve $10,000. If you're a VP, $50,000. If you're the CEO, you can approve $100,000. It clearly lays out the delegation, and if someone's absent, who has to do the next level of approval. This authority matrix also outlines expenses, what qualifies as capital expenditures or capital purchases, and what you can actually put on expense reports. Again, when you see unusual transactions go through expense reports, maybe you can say, I need a different routing. It needs to go through the invoice approval process. This authority matrix also addresses inventory purchases. Who can enter into inventory purchases, the volumes that they can commit to, and what other levels, how many other levels of approval as the inventory purchases get bigger or longer term types of contracts. This also outlines contracts, non-disclosure agreements, and other contractual documents or powers of attorney, and who has the ability to go in and actually enter into transactions on behalf of the company. It also outlines HR activities, meaning who in HR, if you're giving an offer letter, if there's a severance agreement, if there are leave of absence, anything, terminations, who can enter into those and sign off on those. Pricing authorization in the sales side, discounts, how much discounts can we give, how large of contracts can a manager enter into versus a VP, and terms of payments, extending payment terms or changing payment terms, who has the authority to do that. Also on investments and dispositions of company assets. So if you're selling off certain divisions, certain assets, or you're buying companies, you're buying other assets, intangible assets, who can enter into those and at what amounts. This also addresses financing and central activities, such as if we were switching to a bank, going to a different bank, who can open bank accounts, who can authorize that, and if we're leasing real estate, if we're doing something on behalf of the entire organization around that, renting space, who can do that. You also see here credits and AR adjustments. So how much credit do we extend to customers and who needs to approve it when the credit limits have been exceeded, or when can we issue credit memos and when can we do AR adjustments and write-offs, having that clearly outlined. Also having one for inventory and suppliers. Of course, if you don't have inventory, this doesn't apply to you. But for inventories, when can we do pricing adjustments? When do we do write-offs? When do we reserve inventory? When do we change pricing with suppliers if market conditions change? And there's also treasury activities and financial disbursements. What can we invest in? Is it AAA grade instruments? What are types of investments are we allowed, and who needs to approve that? And then finally, capital expenditures. If we're building out a data center, if we're leasing some space, if we're building out additions to the building, who needs to approve that? So as you can see, it's fairly broad, and this is comprehensive. If you don't need these sections, you don't have to use it. So now I'm going to show you an example of what could be included in an authority matrix. And as you can see here, there are 4 sections. There's one on contracts for procurement, and that's if you're entering into, if you're buying something, if it's under $50,000, a controller and VP can sign off on it, but if it's over $50,000, then it's a controller, VP, and legal. So again, outlining the different thresholds. If it's sales contracts over or under a certain amount, who can enter into those and what you need to do. Non-disclosure agreements, whether it's customer opportunities, whether it's vendors or suppliers, or third party who wants to disclose technology or proprietary information, who can sign those. And then This is an example for other contractual documents. And what that means is whether it's memos of understandings, letters of intent, and the like, term sheets and other agreements, who can enter into those. And outlining that in an easy-to-read grid like this is really helpful for the rest of your organization. And they can quickly see when they get one of these requests, and they can say, oh, this is odd. This doesn't have legal review. It doesn't have a controller review. And it's not signed off anywhere. What do I do? Now people have an idea of what they want to do. Again, my name is Kim Lay, and I'm happy to share with you information, tactics, and procedures that our clients have been putting in place. And if you have any questions, please feel free to email me. And I look forward to continue our conversation